Yeah, morning trades. So we knew it was going to be a tough day at the office yesterday. We obviously saw snaps numbers coming out that got smashed in the after hours. We knew it was weighing on NASDAQ futures, some of the other social stocks like Meta, for example. But then you can add in, a poor services PMI number. You can add in a pretty poor new home sales number in the US at 591,000 relative to 749. And as soon as the cash markets open, we just saw this liquidation, this dumping of equity positions coming through. S&P futures at that time trading down to 38.72, so we're down about 2.5%. There was talk whether we could go and revisit those lows from last week of 38.07. It was feeling a bit ugly. We saw 10s trade down to 271. That was down about 14 basis points. We saw dollar yen trade down to 126.36. NASDAQ futures at the time were down about 3.9%, trading down to 11,579. But as the sessions wore on, we've seen traders have a rethink. Buyers have come back in. You can have a look at that intraday tape of the S&P futures. You can see that nice melt up into the close. Now, cash markets are generally lower, certainly in the NASDAQ and S&P. But they're well off the lows. You can see the Dow's actually made some positive gains there. You can see that McDonald's have worked quite well. Verizon's worked well. We've seen IBM making some points, and JP Morgan have put in some points. That market probably be the standalone. Bit of focus on Tesla, the stock trading down to 620.57, down about 8% or so. Looks pretty sick at the moment. There's been good sellers, good shorting activity playing through there. It's not just been your snaps of the day, but Tesla's certainly been getting and working out. Going to the fixed income side of things, you can see buyers all across the curve. Certainly in twos, the market's having a bit of a rethink about the amount of rate hikes that are being priced in. You can see that in swaps, where swaps for the end of the year have priced out 11 basis points of hikes for the end of the year. That was sitting around 255 basis points of hikes coming back on the 3rd of May. We're now at 183, so the market's repriced that. You can see that's obviously helped the gold market. We've got good buys of gold, we've seen good buys of silver. And going to the FX market, it's all yen at the moment. Sterling yen's under pressure, CAD yen's under pressure. You've seen euro dollar doing nicely, one trading up to 107.48. And today it's really all about your Kiwi exposure. Keep an eye on that. The market is expecting 50 basis points of hikes, but there's a few people out there saying we could get 25. We could see the RBA and Z calling out peak hawkishness. So a big day for the Kiwi dollar today.